Hey, good evening, everybody. Welcome to this week's edition of Ask Chioma Anything. Ask Chioma Anything is a weekly broadcast that we bring to you live on Facebook, live on YouTube, and if you're watching us today for the first time, I'll ask that you kindly, what's the word? Subscribe to all of our channels. We are on YouTube, like I said. We are also on Facebook. My name is Soji Fagade. I'm standing in again for Chioma this week. Chioma, unfortunately, is away, and she will be back hopefully next week. And yes, I'm glad to be here, and I'm glad that you're joining us today. If you're here for the first time, or wherever wherever you're watching this from, please type in the comments below and let us know where you're watching from. And if you leave your name as well, that would be really, really good. I was saying earlier on that if you haven't subscribed to our channel, you can do so by clicking on the subscribe button. You can see the subscribe button at the bottom of your screen there. It's normally at the bottom of your screen, but I'm just showing you what it looks like. And then, if you need to get notified anytime we go live, the best way to do that is just, again, to click on the bell button that you see, again, at the bottom of your screen, especially if you're watching this via YouTube. If it's a live recording, yes, you'll see those buttons there. So it's very, very lovely to be here, and I'm so pleased. Thank you so much for joining us. I see we have plenty of people here today. Like I said, if you are joining us for the first time, please leave your name in the comment section and tell us where you're watching this from. Right, tonight we have a very, very lovely question. We'll come to the questions in a minute, but suffice to say that we have, last week I think we dealt with what did we deal with? We had what's this thing called now? We did a little series on, well, it was the second part of the series on what was called the business model canvas. And business model canvas is something that allows you to create business models. You know, you can watch, go back to our channels, and there will be a link for you to go and watch last week's episode. It was really, really good. I mean, I hope you enjoyed it. If you have any questions relating to that, please, by all means, come back and let us know what you think or what questions you have. So tonight we're going to ask, I think we've been asked one question. I'm just trying to figure out what that question is now. Right. The question tonight is a very, very, well, it's an interesting one on many levels. It says, what do I need to know about financial statements? And that for me is a really, really interesting question. Now, if you've ever been in business before, you would know that financial statements give you what I call like an overview, like a big picture of what your business really is like, so that anyone that wants to see what you're doing, they can at a glance have a very, very good idea of what the business is about. And most financial statements are sort of built into like the different types of financial statements. I think the most important ones are what you might call the income statements. They tell you how much revenue you got coming in as against how much you've spent. And I mean, why do most people even need financial statements? They want to sort of see the health of a business. Either they're trying to invest in a business, or they've got investments in a business, they want to see how it's performing, or they're running a business and they want to see at a glance how well the business is doing. And those financial statements help you to sort of get a pulse and a feel for the business. And the three types, like I said, there's the income one, there's what we call the balance sheet, and also the cash flow statements. Now, those three are very important in many different ways, and I'll explain what each one of them looks like or does in the course of this broadcast. For you as a potential investor, you want to sort of see, hang on, does this business have the cash flow to support what the business is doing? Will it be able to meet its commitment? It may well be profitable, as we will see down the line when I'm explaining a bit about those statements in detail. But you may not have money to pay your suppliers or meet your commitments. Now, even if you're profitable, then it only means that the business is not healthy from a cash flow perspective. I'll explain that when we get to it in a minute. But let's start with income statements. Okay, first of all, income statements give you an overview of the revenue you got coming into the business. So if you make sales, if you had money coming in, you had let's have a look. Is my audio working? Oh, it is working. Okay, I hope so. I'm not sure. I think someone's saying that the audio isn't too great. Is that correct? Nirma, thank you for joining. Can you hear us? If you can hear us, just let me know. Just by leaving a note in the comment section below, and I'll be happy to make a note of your name. Anyway, as I was saying earlier on, I was saying that income statements give you that picture of how much revenue you've got coming in your business, and that's important for many reasons, because you want to know that a business actually makes money. And you may have plenty of revenue, but if you have expenses that outstrip your revenue, you can tell at a glance that that business is not making money. Right. Oh, the volume is low, he says. Oh, I hope it's better now. Is it better now? I hope you can hear me now. Right. Let's see if I bring the mic a little bit closer. Right. So the revenue you've got coming into your business reflects how much sales your business is making. It reflects that you've got customers, basically. So it also tells you if you're making margins on the sales that you have in your business. So your income statement will tell you at a glance how much you've sold. It will also tell you how much you spent out in making those sales. And of course, that gives you your net profits, of course, before tax. And of course, after tax, you see how much is left. Now, on the face of it, if you've got profit at the end of it, that tells you that the business is doing really, really well. However, it doesn't quite tell you the whole picture. It doesn't tell you how you can value the business at that point in time. It doesn't tell you how much the business owes to potential creditors, or how much it owes in terms of maybe it's bought land, it's bought equipment that hasn't been paid for, but it made profit in sales. But it doesn't tell you if you've got outstanding taxes to pay, if you've got liabilities that you have to meet, and it doesn't even tell you how much assets you've got, So you need to have a picture which sort of gives you a much more fuller picture at that point in time, which is where the balance sheet comes in. Now, the balance sheet is a little bit more robust in terms of it sets out at a particular point in time where the business is, because it tells you at a glance, say, look, okay, these are the liabilities of the business, these are the assets of the business. If you take out the liabilities of the business from the asset, it gives you the net value of that business on a particular day. And the thing about statements or financial statements is that normally most companies produce them periodically, right? They either produce them monthly, quarterly, or annually. But most businesses tend to have quarterly reports in the business to give people a sort of a glance and say what we did last quarter, and they also want to sort of maybe make projections as to what they expect to do in the upcoming quarters. So that's really also very, very important. Now, at a glance, you remember I said to you, you see what you owe as a business and what you have as assets. The difference between that will give you the net valuation of that business on that particular day. Now, for me, the most important financial statement is the cash flow statement. And why do I say that? Because no matter how profitable a business is, if it cannot pay its bills, because you've got loads of people who are owing you money, or you have plenty, you've sold a lot of goods, but you're owed so much money that when your bills become due to be paid, you cannot pay them. Now, no one cares how profitable your business is if you can't pay your bills. They don't want to know that, we've got sales of £1 million out there, $1 million out there, or 500 million naira out there, But if it doesn't translate into cash, then it's like vanity metrics, No matter how much outflow of sales you have, you've got to have a way of bringing that money in. And a lot of businesses have collapsed, on the basis of them not managing their cash flow properly. I wrote a book on cash flow management. I should actually put a link in the comment section after this podcast, where you can sort of download a free copy of that cash flow management book. And the reason I wrote that book at the time was because I came from personal experience of managing the cash flow of a business. I was doing reasonably well. I mean, 8 figures in annual revenue consistently on a consistent basis. But that business suffered challenges, and that led to its failure. Now, the major challenges that led to this failure was cash flow management. You know, we had plenty of money outside, we owed plenty of money, and we didn't bring the money in when they became due. Ultimately, it led to the crash of the business. So for me, cash flow management is at the core of any business that is going to do well. So if you're looking at any business with a view to buying it, or with a view to investing in it, or with a view to assessing it as an opportunity, those 3 income statements are very, very important, because they're all important in their own ways. You need to know, A, that they have sales, and the sales outstrip their expenses, i.e., they are profitable, right? Okay, but that's only half the story, like I said. Also, you also want to know that the valuation of the company is such that they have more assets than they have liabilities. So even if they're making profit, they may not have a lot of assets, or they may have plenty of liabilities. So you need to be aware that business is very, very well balanced. But most importantly, like I said, you've got to have positive cash flow in your business every time. So that for me is very, very important. It's actually the key, most important element of any financial statement. I hope you found this session useful, and I'm hoping that Chioma is back next week, and we'll come back to you with hopefully more questions to be answered. It's really lovely being here, and I welcome your comments. I welcome your thoughts. I welcome your questions. So please leave them at the bottom of the page, or if you, like I said, if you've been here before and you haven't subscribed to our channels, please do so by going to our YouTube channel, where you can subscribe to the channel. The more subscribers we have, the better for us. And then also, if you also need to get notified anytime we go live, it'd be nice if you could also click on the bell button that enables you to get notified anytime we go live. Thank you so much for joining us today, and we shall see you next week. And I look forward to seeing you guys again next week. Take good care, and God bless you all.